think a stock worth watching in 2019 may well be one which has long been loved by the market, but the share price hasn't necessarily caught up with that consensus. The share in question, Prudential. Prudential, as well as being long established, is one of those stocks which is riding the wave of the fact that the younger population now needs to save for its own retirement. In addition to that, it's got big geographical diversification. In the US, it caters for the baby boomers. In the emerging Asian middle classes, it also caters for their health and life insurance need as well as investment needs. And of course, we all know about the man from the Pru in the UK and Europe. An interesting point around Prudential is that M&G Prudential, namely the UK and European part, is actually going to be demerged from the larger group. And whilst that's not expected to happen until 2020, it's likely that the two companies which will then be left will nonetheless both be FTSE 100 constituents. If you look at the share price for the Prudential over the last year, it has been hit by some concerns around the Chinese economy. Shares are down about 17%, but that hasn't changed the market consensus on the shares, which remains a resolute buy. There are probably a couple of risks around Prudential. Financial stocks tend to be regarded as rather higher risk, so obviously if there's a broad brush markdown of financial stocks, Prudential could suffer there. There's also of course concerns that the Chinese economy won't be able to keep up its breakneck expansion over the next few years, although undoubtedly the middle class is emerging there. And of course there's something of an execution risk when it does do the demerger of M&G Prudential, which could take management eye off the ball.
Well, markets are volatile again, and there are plenty of headwinds going into 2019. A stock I like the look of is Sainsbury's. It's in the food retail sector, one of the best known supermarkets, and it has defensive qualities. There's also merger and acquisition potential there too. Sainsbury's has outperformed its rivals in 2018. It's bought Argos, and Argos is doing really well. It's generating big cost savings. Recent half-year results beat expectations. The return of inflation is good for earnings, or will be good for earnings, and the dividend yield is attractive, and it's trading on a forward price earnings multiple in line with the 10-year average. The big event to watch in 2019 is of course the mega merger with Asda. It's still awaiting Competition Commission approval, but if it gets the go-ahead, this could be a game changer for the industry. Of course, the Asda deal still requires Competition Commission approval. We should get provisional findings in January, and if it does decide to give the deal the go-ahead, then we should find out in the spring. That means completion won't happen for another couple of months until we get that clarity. But we think the benefits outweigh the risks.